Sponsored by Lexus of Las Vegas and Lexus of Henderson.
Mortgage rates remain near record lows, but getting one is becoming more difficult due to the coronavirus crisis. I spoke with local financial professional Brad Zucker from Safe Money Advisors to help you decide if now is the time to buy or refinance your current mortgage.
Brad, what should we consider before taking out a mortgage?
Well, whether you're a first-time home buyer or you're downsizing as you approach retirement, like many of our clients, the first thing you need to figure out is how much you can afford. And the rule of thumb is not to spend more than 30% of your pre-tax income on housing expenses. So, for example, if you earn, say, $5,000 a month, your mortgage, property tax, and other expenses should be capped at $1,500.
Why is it so hard to get mortgage right now?
Yeah, both the mortgages and refinances are difficult because of the COVID-19's impact on the economy and employment. So lenders are tightening their standards in response to a higher risk market. For example, many companies are requiring a deposit of 20% of the home value and a high credit score.
For people who are looking maybe to consider refinancing, what should they know?
Well, the first question is, will it reduce your monthly payments? The purpose of refinancing an old loan with a new mortgage is to lower your monthly payments through lower interest rates. So you must take a look to see that the cumulative monthly savings is going to exceed the cost of refinancing. Also, you can lower your monthly payments by extending the loan from a 15-year mortgage to a 30-year mortgage. The drawback, you'll pay more interest in the long run.
Is there any other question that people should have in their minds when they're looking into this?
Yeah, if you've got equity in the home, you should consider refinancing to get your cash. When you borrow for more than what you owe, the lender actually cuts you a check for the difference. This is called a cash out refinance. So instead of taking out a new loan just to pay off the balance, borrow more than what you owe and pocket the difference. You could use that money to renovate your home to increase the value, pay off high credit card debts or other expenses.
Is there anything else that people need to know?
Yes, paying off the loan faster by going from a 30-year mortgage to a 15-year mortgage will help you cut your interest in the long run. But remember, there are fees and charges associated, and you could speed up the payment if you go from paying a 30-year mortgage and make it as if it were a 15-year mortgage.
Can people get rid of their mortgage insurance?
Yeah, if you put less than 20% down on your home, your lender requires you to carry private mortgage insurance or PMI, which can cost as much as 1% of the home loan. But if your home value has increased over the last several years, you could refinance and get rid of that PMI. So if you want to know what a refinance looks like, we've got a calculator right on our website at askbradzucker.com to help you crunch the numbers.
As always, we appreciate your advice, Brad, and we'll put all of this information on KTNV.com. We'll be right back.